Hello, hello, hello. So I hope everybody's had an awesome weekend. This is 50 pips, 17th of November, 2013. I'm not making any trade calls or recommendations as you and only you are responsible for the trades you may decide to take. The fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers on the blog and understand that we're just doing this for educational purposes only. So what's going on? Going into the week, I think keep in mind in terms of the data points, Monday's going to be fairly slow. There's not a lot going on. And really, Tuesday is going to be the first big interesting day. We've got monetary policy minutes out of Australia. So that should definitely be a bit of a mover for Aussie. And then we've got these ZEW for on the Euro side. That's going to be interesting. Then the week will shape up pretty interesting because on Wednesday, we've got, a bunch of GPB data and then a bunch of US data. And we've got the FOMC. We've got Bank of Canada speaking, a bunch of stuff. Then overnight, I think on Thursday is when we've got the HSBC, the PMIs out of China, and then we have all the PMIs out on Thursday. So again, Thursday, Friday, we're going into IFO in Europe. So there's a lot of interesting things going on this week. So hopefully we'll get enough volatility, we'll get enough moves to make it an interesting week for us. I'm going to try and keep this short and focus on some interesting charts. Now, as far as the future side goes, so I mean the equity markets continue to rotate higher, right? Continue to grind higher, and they're going to go higher until they're just going to stop, right? In terms of moves, in a healthy market, we would expect to see some retracement. So again, my position hasn't changed. I'm looking for possibilities to get a bit short on the equity side. I'm really in no hurry at all, and I'm definitely not going to step in front of this train. The feeling is we have to fail from higher levels to get some good momentum, and what I'm watching very closely is still going to be the Russell. Okay, now in terms of the Forex side, in terms of euro, nothing much has changed, right? We've got a couple of interesting charts on euro. Now, we were looking at, and again, go back to the previous videos if you want to see the full detail about the moves, because I explained the whole structural moves in detail. But basically, you see what's happening. The 50 back of the most recent move is holding that confluence zone, that support with a 100, 200 is holding very nicely, pure little trade, and it's holding to the upside. What we said is when we were moving to the upside, there was two big zones, which are levels which were interesting in the past, which was 130.400 into 134.50 and 136 into 136.50. Okay, and what happened is the shorts, if they wanted to keep an aggressive push lower, they had to keep price hovering below this area and sell very aggressively going into last week. Now, the fact that we went straight through and you see that every move back down, we caught bids and we're holding above the 134.50, it looks like price is trying to muster out rotation back into the 36 at least, which is going to be a key point. Keep in mind that as long as we're hovering on the daily inside this zone, we could get a lot of volatility, but we really need to see breaks and holds outside this area, right? Even though we're in a measure move long and the 123 extension of this move is back into the 140s, 141s, okay? And I posted a shorter term chart on euro because a lot of people were getting excited, and I kept on saying, don't get confused about velocity of move inside the range, especially in slow markets, right, in a slow chop. And what happened is once we had the big press lower, right, essentially what we've got is we've got a range here on the 1 hour, right, with these 132.80s to the downside, and we have this strong hold here, the 135.40s. And you see what's happening there. The market's been very quiet, but it's very, we've been slowly rotating upwards, right, making a whole series of higher lows and higher highs. And right here, even Thursday, Friday, right, we're just hovering straight in mid-range, but all the dips kept on getting bought and we're still pressing higher. So at the moment, it still looks price is trying to make its way higher. It might have to fail for a higher level, but keep in mind that, especially in slow markets, don't get confused with the velocity of move, right? And even a market like Friday, 20, 30 pip move is really nothing, right? So again, it looks like it's stuck here. It looks like it's going to have to probably fail from higher levels if it wants to fail, but it looks like it's trying to build some momentum to the upside, and it's holding a bid tone. So again, I think the key chart on euro is the daily one. It's on the blog, and that's the chart I would be focusing on, okay? In terms of cable, what's going on cable? So cable, we talked about this whole range, right? We've been looking at this range for a long time. And what we said it was key last time is if this break lower was going to be a fake out move for a move all the way back up into the 120, 162.50s, etc., and try to make a move for those 163.50s, okay? And what we said last time is if you see once we broke through here, we broke all these stops, we couldn't get any kind of momentum, we came back in and the bids started coming in, right? Supported, moving very, very aggressively. And what we said is, right, if you're looking, most likely the shorts are going to be waiting for it at a couple of levels, right? The first level is probably the 59.90s. If we break through 59.90s, probably this is going to continue to go at least into the 60.80s very aggressively. Those were the key zones we're looking at. And once you see here, look how technically knife through butter, straight to the upside, then we come back that what was supposed to be resistance, which was very good support, broke through it, back at support, once again, continues the rotation higher. So right here, as we're stuck at highs, I mean, I haven't looked at where it's trading here. I'd suspect in the overnight session, it might, unless we get a gap down, it'll probably most likely try and press to the upside a bit. So what you really want to watch going into the week is how we behave around these 161.10s and on any dip into these shorter time frame lows we put in where the bids were coming in. That looks like it's pretty much the 60.50s. But again, as long as it holds this area, key is going to be probably to look for this to continue to try and rotate higher. So again, from my outlook still hasn't changed. I'm still looking for this to rotate higher. I think GPB is putting in possibly a structural low on a number of pairs. We've got the GPB CHF chart, we've got the GPB JPY chart. There's a bunch of charts on the blog too, but it looks like it's trying to press higher and it's looking very very interesting. Going into the week, keep an eye how we behave here. If early on the week we break down below the 60.50s and we get some traction, then it could get heavy. But unless we really hold below that level, I suspect the path of least resistance is still a rotation to the upside. Again, going quick because there's really not a lot that's changed in terms of outlook on what we were looking at last week. Yen, again, it looks like it's very, again, rotating higher. What we discussed is you have to respect this 200 moving average. You have to respect the fact that it was holding every time it came back in, gave a lot of interesting buy opportunities, and then we went straight back into the 100, 150 range. Now, we discussed, again, guys, I'm sorry, we're going to have to get confused if we discussed it here on the weekly session, but basically we discussed the fact that I think we discussed it on the free webinar that the 100 wasn't really that important for us because the level had been violated so many times. So it's really not a level of interest. We'd expected it to go straight through. What was interesting was this high, which was coming in at the 150s, okay? So that really hasn't changed. So I expect this is going to be a whole zone where the shorts are going to try to cap this and sell this into the beginning of the week, probably stops above the 150s for a move back down. But again, it looks like it's trying to gain momentum to the upside. This is a very key resistance. The only thing I'd say is if it fails, this is probably a good place for it to fail. But if we go into the week and we break and we hold above the 150s, I'd expect this next resistance to give out fairly quickly and again the grind higher to continue. And that's a similar chart to what we were discussing on EJ, right? And it's just been the 132s has been such a great level for so long, really. And I talked about it on Twitter again. As long as those 132s catch a bid, we're looking for this to break back into the 135s, and it's pressing very nicely, and it's holding. Going into the week, the key level to keep an eye out for are going to be those 3550s, 3560s, right? That's the big pivotal level, and that's the big level. These are the big two levels we've been chopping around, okay? So especially if it breaks above and it can't find any sellers, I really would be very cautious of being stubbornly short here. If we start to get daily closes above the 135.60s, I'd expect this to slowly try to grind its way, potentially in aggressive moves all the way back up into the 139s. Again, that outlook hasn't changed for ages. We've been looking for those 139s for a long time. However, if we go into the week and these highs, this whole 135.50, 135.60 gets sold off aggressively, then do not be surprised to see us trading back into this mid-range 133.50s, 133 70s. So again, I think because this range is pretty big, so I think don't be surprised to see 200 pip moves up or down, but it looks like it wants to take out some more upside. A couple of other charts which were interesting people were asking about. We discussed this last time. I'm pretty sure, I'm 100% sure, in the weekly, right? And what we discussed this level on Aussie, right? We've got a lot of Aussie data coming out this week, so it should be interesting. And what we said is basically, again, watch last week's video if you want the fuller version, but we had this big move from highs to lows, rotation into the 50 back and the 200 moving average, a beautiful sell trade right here, moves right back down. And what we said, if this is going to find support, we expect it to be choppy, but where would we expect it to find support? We would expect it to find support at the 50 back of the recent move up. Bam, 93.019. And the confluence that this is coinciding with is this upward channel. You see what happens. This is the 50 back, no voodoo line, nothing. We talked about it well before we moved into the range, right? And you see that buyers coming in every day, just wicks below there. We couldn't get any momentum below that. Every time we pressed back down, the buyers came in, supported, and now it's trying to make a move to the upside. So it looks like an intermediate bottom is in. What the market will likely try to do now is trying to move back up and take a stab into those 95.20s, which are going to be the pivotal level for this week to the upside, right? If the shorts are still on this, they need to hold. This is so important that they manage on any pop to hold it below the 95.20s. If the 90, so the longs have marked the point here, and now market should try to make a rotation back higher. If the shorts can keep it below 95.20s, then the short case from this level is fully intact, and we'd expect to see rotation back down 91.90s. But if this gives, then this whole bear case is invalidated, and we'd expect to see price all the way back up into the 97.00. We should get some kind of conclusion, I suspect, with the data coming out of the RBA this week. What else quickly? Kiwi, well, actually, we've got some trades on that. Let me just get a blank chart on Kiwi. What's going on Kiwi? Again, very, very nice. We've been talking about this on ages. People are going 50. Why are you so boring about this? Well, there's only one thing to look at, really, and the thing to look at is the 200-day on the daily, right? And you see every market's been supporting that level every time we pressed into that zone. We knew this was going to be choppy, but unless we could get a daily close below that 200, shorting lows, shorting into support before the key levels break is really not a high odds trade, okay? And then if you look at this also from a 4-hour perspective, very, very nice trade, because what happened, we've got all these wicks, all the markets supporting these lows here. Then we get in a very slow market, we said don't get confused, market easily take out stops here. What happens? We get this nice little press lower, we clear all the weak stops, right? And then get back, just make this a bit bigger. You see this, very nice, clear all the stops there, nice little positive close, gives you a nice little chance to get back long, and bam, right back into the scene of the crime, right? So you see that here, the market has sold this, and not surprisingly, on a very slow, choppy day, end of the week. And right here, the market is trying to find direction. A lot of people are going to be talking about a potential top here. And what's interesting is the broader range, but the way this is trading, right? It looks like it wants to take a stab to the upside. So the way I'd be looking at that essentially is, we've got our low range set, and the high range is pretty much those highs, all those wicks selling those highs. And right here where we stuck this week, well, mid-range, I'd call it this spike high into this next spike high. Now, it's not really pure mid-range and mathematically mid-range, right? But you get the point, right? So this is where it's likely going to be looking for direction. And as long as the sellers can hold it below there, then likely market try to keep on taking stabs below there aggressively. But if it starts to trigger stops above that, then I would expect it to move back to take a stab at highs extremely, extremely quickly. So we've got a lot of data. We've got a lot of stuff coming out. We've got China data out too. too. So we should see some kind of resolution this week, I think. But again, a pretty interesting point. But as usual with these charts, the real edge, in my opinion, lies in playing the extremes, not in engaging at mid-range, right? And this is a clear example of what we talk about. The edge is at trying to be aggressive at the extremes. This is a clear example of what it would be like being aggressive at extremes, not in the mid-range, okay? And then another chart a lot of people were asking me on the blog to review is this CAD chart. But hold on, I got trades on that too. So we got what's going on CAD, and it's very, very very interesting. So the important point on CAD really is the number. And we talked about it on Twitter a lot, that we potentially put in a nice little top, is this 105. That's the key number. So what was happening here, we're coming back into this 105, and you see that the market is trying to protect it, right? And then we see all these wicks, so pushing in here. Basically, we try to take some stops to the upside, but we can't get any traction. So it essentially is just sellers coming in here, but very, very whippy. So what we said is here, we were expecting this to take out stops to the upside one last time and then reverse hard, okay? Full disclosure, I did take a shot at it before trying to front run, and I got stopped out, very small position, but you know, then this had a lot of plenty of other opportunities to engage, right? And if you look at it on the 1 hour, this is another pure little, you know, stop hunt to the upside, nice little reversal candle at highs on the 1 hour, and then we start to roll. So here what I'm looking at is I'm looking at a potential top being in and a move back down into the 200-day moving average. Currently that is coming in about, you know, let's see, 103.03, so call it 103s. Right, so that's clearly what I'm focused on, what I'm looking at here. Again, you know, my money's where my mouth is, so we're on this trade short, working out quite nicely. So I think what you want to watch in terms of support is just clearly just these previous supports, see what happens. Look here, we've also had a lot of action around here, so that's probably going to be the big pivotal level. If the buyers come in early in the week, then we could get some more choppiness up here, but if that gives way very, very quickly towards the beginning of the week, then we could see a rotation right back down into that level. So that's what I'm looking at. It's looking interesting. I think it could be a very interesting chart to follow this week. So I think that's about it for this time. I hope everybody enjoyed the content. I wish you guys an awesome, excellent, super end of Sunday wherever you may be or whatever you may be doing. Thanks for listening. If you like the content, again, don't be shy about sharing it. Have an awesome one. I'll post it on the blog now, and then I'll tweet it out. You guys will see. Have an awesome one. See you tomorrow for London Open, okay? Take care. Bye-bye.